The most sophisticated money in the world, the biggest money in the world, is de-dollarizing, and their preferred vehicle is gold. Now, I would not ignore silver. The Bank of India imported 304 million ounces. That's more than is on the entire COMEX exchange. The moral of the story is the big money is accumulating commodities. They are moving away from debt instruments like US Treasuries. They are moving away from dollars, which are being inflated and won't be quantitatively tightened, as the Fed likes to call it. They won't normalize their balance sheet. They've already shown that they've chosen inflation, and they will continue to choose inflation, where over the last 3 weeks, we've seen literally 2/3 of all the tightening that they've tried to do, which means shore up their balance sheet, sell the treasuries. All of that over the last 11 months, in the last 3 weeks, 2/3 of it has been reversed, where they've added 400 billion back to their balance sheet. So this is a situation where the biggest money in the world is using gold and silver and hard commodities as wealth in a system that's
Right.
been dominated by debt instruments and being very opaque. We are transitioning to a system that is dominated by commodities and transparency. And I think that's really what we've seen over the last couple of years. By raising interest rates as high as they did, you could see, and again, I would say they haven't even begun to raise them as high as they need to go, because in order to stop inflation, you must raise rates above the rate of inflation. Now, on one hand, they lie about what inflation really is. The CPI has been changed so many times that if you just look at what it was when they measured it truthfully prior to 1980, inflation's at 15+% right now. And that's what John Williams of Shadow Stats would show us. But they tell us that's at 6 or 7%, and they raise rates to 4.5 or 5, still below the rate of inflation, which means the real return is negative. In other words, if you're getting 5% on a 10-year treasury, but inflation's at 7, you're losing 2% per year compounding. It's a real return that is negative. So they didn't raise rates high enough to do anything, but high enough to start to break the banking system. So either you raise rates to defend the currency against the erosion of inflation, or you succumb to inflation and print your way out of the problem. So in other words,
Right.
either the problem is you pay off the debt for real and raise interest rates, or you inflate. And I think that's what they've chosen. The more you look at it, it becomes very obvious that we are trapped. And I don't think that they can ever normalize the balance sheet. Let me just try to break this down so you understand.
Yeah.
In 2008, when we had the great financial crisis,
Mhm.
and your advisor says, you see, because you just hung on, you didn't sell, everything came back. The balance sheet of the Federal Reserve back then, and their balance sheet really is comprised of two things: mortgage-backed securities, those issued by Fannie and Freddie, and US Treasuries. And the purchasing of these assets by the Fed suppresses interest rates. It drives interest rates down, which creates distortions in asset prices because cost of money is so cheap. The
Right.
balance sheet in '08 during the financial crisis, or right after, was 800 billion. It is now 9 trillion. They have added over $8 trillion worth of bonds to their balance sheet to suppress interest rates, to incentivize greater debt, to incentivize speculation, to make people feel wealthy when their home and their 401k goes way up. It's an illusion. It has been an illusion that has been fostered by suppression of interest rates. And that has created massive distortions in asset prices. Another way of saying that is, what is your house worth at 3% mortgage on a 30-year mortgage, like it was a year and a half ago? What's it worth now at a 7% 30-year mortgage? What would it be worth at a 17% 30-year mortgage? All of the bonds that were sold over the last decade at 1% and 2%, this is what's breaking the banks. They're loaded with bonds at low rates. And if they're forced to sell them because they have no reserves and everyone is running for redemption, they have to
Mhm.
sell the bonds that have been cut in half because they're all at 2%, and you can buy them now at 4.5 or 5. So as rates rise, everything that makes people feel rich, stocks, bonds, and real estate, which have all been blown to sky high proportions due to suppression of interest rates and easy money, well, they're all inversely correlated to a rise in interest rates. And when rates rise, they all collapse. And it's a very frightening deal. So either the Fed raises rates and breaks everything, stocks, bonds, and real estate, and the banking system, or they choose inflation, what all governments have done over the tough decisions and over austerity. And they will, just like everyone else, they will try to print their way out of this problem. And that doesn't bode well for the dollar retaining its world reserve status, which is something I've been talking an awful lot about for the last couple of years. The BRICS currency, which we've already been told repeatedly, and again, just here the other day by the Russian deputy chairman, the Duma deputy chairman, Babakov, reiterated that the new BRICS reserve currency will be pegged to commodities. And why else make gold a tier one asset? Why else are the central banks massively accumulating it? I don't think they'll peg it to the yuan. I think it will be a greater currency. Now, already when you look at yuan and gold, they have something called the petro yuan bond that they've been using to sell oil or to purchase oil from countries like Iran. The bond is immediately convertible. It's denominated in yuan. It's used to buy the oil, but it is immediately convertible for the Iranians into gold on the Shanghai Gold Exchange at its face value. But I don't think they'll use the Chinese yuan and peg it to gold. It will be a new settlement currency, either issued by the Shanghai Cooperation Organization, which represents 60% of human population already, or the BRICS countries more specifically. To me, there is no doubt in my mind that gold will be used to tether to a new system. And I don't think it makes any sense to try and pick numbers right now, only to listen to what they're saying. Look at the countries that are accumulating all the gold. As an example, Turkey. Turkey bought more gold than anyone in the world for the last 18 months, including this year. And so when you talk about how do you show that, well, the Chinese have what's called the digital yuan, which has been operational for over 4 years, most of it operating on the Belt Road Initiative, the largest infrastructure project in human history. Over 150 countries are already on it, including all the OPEC countries. And they've been using the digital yuan to settle all of the contracts on the Belt Road, including they rolled it out at the Beijing Winter Olympics. It's done close to 30 billion in successful transactions. That will be the blockchain or the rails to show what all of these countries, I think they will use it to back the new BRICS currency. And they will show the immutability and the veracity of what every single country has pledged to the system. So I think it's coming. I think it won't be directly from China, but rather this conglomerate, this joining of countries around the world fighting against the Western hypocrisy and hegemony. And they will use distributed ledger technology to show exactly what every country is pegged. And they will have a number, and whatever that number is, I don't know, but I think it will be much, much, much higher than, in dollar terms anyway, than what it is right now when the switch gets flipped.